further. Um, we will be recording and sharing this later on. We'll tell you how you can see it. So without further ado, I'd like to introduce to you our presenter, Jason Hughes. Jason has worked here at the credit union for 5 years, is currently a certified financial counselor in our financial wellness department. Jason is a traveler and is a foodie. He enjoys Indian cuisine. His favorite destinations travel wise are Cape Town, Africa, and Mexico. He helps with the cadet programs. Those are the new pilots coming through the system with their presentations. And in one of them, he was able to be in a simulator and he was able to take off and land with no issues. Later on, you may hear Jason sing a few bars, but besides that, Jason, the floor is yours, and I'll check back with you. Thank you.
All right, thank you, Butel, for that awesome introduction. I don't know that I will be singing anything at the end of the presentation, but we will definitely be talking about savings and how to build savings from the ground up. It's something that comes up quite often in my interactions with members, and so we just wanted to make sure that, you know, from our perspective, we are giving you guys some of the tools and resources to be able to come up with a plan around building a savings account from the ground up. So today we're going to be talking about different strategies, some tips, and other things that we look at when we are talking to members about how to build their savings accounts. Okay. So let's go ahead and start with what we're going to actually be talking about today, right? We're going to be discussing the savings reality, what it looks like when you're actually saving, right? We're also going to be talking about whether or not it is wise to be able to save when you also have debt to pay, right? And how to be able to make the distinction on which one is going to benefit you most, right? We're going to be talking about how to establish goals. We're going to be talking about creating a savings plan. Also, how to be able to maximize your income. And in doing all of that, how to make sure that we plug any leaks that, you know, where we may be potentially losing money while we're saving, right? And then tips on just how to save money on an everyday basis, right? And then how we can help from a financial wellness perspective, right? And I think it's really good to start off with a really interesting statistic and one that was mind blowing for me when I actually was putting this presentation together, in that 78% of Americans actually live paycheck to paycheck, right? And I think that this is such a impactful presentation because with so many people living from paycheck to paycheck, I think it's really crucial that we give information on, you know, for those people who are living paycheck to paycheck, how to be able to just get to a place to where you could possibly live comfortable, okay? So now I want to ask you guys this question. Are you guys prepared for an emergency? And did you know that only 4 out of 10 Americans will be able to pay for an unexpected expense if it exceeded $1,000? That's another really alarming statistic, right? Yeah, really alarming statistic. I mean, it's one that I actually did not believe when I saw it, but you know, I think that that's another reason that, you know, classes like this and presentations like this are really important, is that, you know, we should be offering ways and resources to be able to help our members, you know, in the event that they're in this situation, not to be, right?
All right, Jason, we are in our first polling question. And again, everybody in webinar land out there, please feel free to join us. Again, if you need to twist your phone to find the feature to answer. The question is, if faced with a financial emergency costing $1,000, would you be able to cover it without borrowing money? Simple, A, yes, B, no. Um, Jason, you know, I know that at times things get really tight and we run really quick to our credit cards. That's not the best way either, right, Jason, you will say?
Not necessarily the best way. And that's actually what I was going to, you know, present to the group. I want you guys to drop in the comment section And tell me, for those guys who are answering, yes, they would be able to cover $1,000 expense, right? Where would you go to be able to get that? Would it be something like a home equity line of credit? Would it be, like Utel is asking, would it be a credit card? Would it be from money that you have in your savings account? So I'm interested to hear, where you guys would actually go for those of you who have access to $1,000 or more to be able to get that money.
All right, Jason, the webinar time is over. And it seems, and it looks like that over 54% says yes, that they're able to cover. And we applaud you for this, guys, for being able to take care of your finances. But then there's still an amount of webinar attendees that are not able to. Please don't feel any guilt. That's what we're here for. We're here to help you improve your financial wellness. And Jason's team, that's what it's here for. We work for you guys. You are our owners. So I'll give it back to Jason to continue with the presentation. But again, that's what we're here for. This is what this webinar is for. Thank you.
So absolutely, we definitely don't want to make anyone feel left out by mentioning that you were not able to cover the $1,000, and this is most certainly the reason that we are here is to help position you guys to be able to get to the point to where you can. But also, I think it is important to kind of include those people who could actually cover it, because sometimes people have goals to not only necessarily start with the funds that they have, right, but maybe increase that. So we're also going to go over different strategies to be able to just work towards saving altogether. So, you guys can be included as well. Okay. Were
Yeah.
there any comments as to where people would actually go to be able to access that money?
Yes, Jason, I was gonna jump in and let you know, those people that are answering the comments, most of them are able to have it either from their savings, the share certificates that they have, or retirement accounts that they have out there. So there's some people that are ahead of the game. Yes, and that's great. Like I applaud you before. There's others that are steady pace trying to catch up. So again, back to you.
And the thing that I like about that is that I didn't just hear one particular type of account. So not just a savings account and not just a credit card. There are people who have, share certificates. There are people who have retirement accounts. So I think that that's absolutely outstanding, right? Now let's go to whether or not you should actually um, start to save when you have debt to pay, okay? So people often ask the question, and it doesn't seem right to leave money in a savings account when you have debt that you could be paying off, right? But consider this, emergencies happen, right? And when unexpected expenses come up, if you have the money in your savings account to cover these things, you won't necessarily have to borrow it, okay? So borrowing money increases your monthly payments, making it even harder to save when money is already tight. But there are those times when it makes sense to actually pay to pause saving and pay off debt. Okay, so let's take a look at when it actually makes sense. All right. So some things to consider when you are looking at whether or not you should actually be saving versus actually paying the debt off is if you already have an emergency fund of at least $1,000, right? And so it sounds like here again, we see this, $1,000 number. This is kind of going to be the benchmark for at least the amount that you probably should start to have. And so that's a good gauge on, whether or not you should be, contributing to debt or continuing to actually save, right? Another thing to consider is when the interest that you're paying is higher than the rate of return on your savings or investment account, right? So for those of you who have, money possibly just in a regular savings account that isn't necessarily yielding you the amount of money that you need, it's a possibility that it may be more beneficial to actually contribute money to debt, okay? Because of the interest that you may be paying on that. And also when the debt can easily be paid off in a short period of time, making it easier to actually start the savings account, right? So let's just say I have a lingering small credit card debt out there, maybe $200, and I know that I will have, at least that on my next paycheck, right? Versus, trying to contribute to my savings account, it may just be more beneficial to go ahead and pay that credit card off and then, start saving with a clean slate. Okay. Also, when we should look at saving before paying off debt, right? So you make sure that you need to build an emergency fund, right? So in the event that you need that, make sure that you have that. When your debt has low or no interest, okay? Or when your employer offers a 401k contribution match. And that's a huge one to take advantage of because that's literally money that you're leaving on the table in the event that, your employer actually matches what it is that you actually put in, okay? Now, one good thing about starting your savings account is understanding, what it is that you're actually saving for. I think this is the first place to start, right? So making sure that you identify what it is that you're saving for. And some of the things that people save for, there could be a number of reasons, right? But these are the things that we hear most often are emergencies, right? So for those people who just want to save for everyday expenses or emergencies that could potentially come up on a day-to-day basis, that's something that you could that people potentially save for. There are two ways that people actually save for homes, whether or not it be to someone looking to be able to purchase a home, or for those people who already are homeowners, right? In the event that something happens to the house, right? Expenses to be able to cover what could potentially happen with the current home that you own. I have friends who actually are currently saving for their children's education. So that's typically a big one that we hear. And if you are anything like me, you want to make sure that you have the vacation account set aside for any potential trips that you want to take. So that is another one that you want to make sure that, that we hear a lot when we are talking to members about their reasons for savings, right? But there are not, these are not the only things, right? People save for a number of reasons, and it's going to be specific to whatever it is that you have going on in your life. So please, don't limit yourself to these categories that we're going over, right? But another thing I think that is important to make sure that we consider after we have identified what it is that we're saving for is to also make sure that the goals that we're setting are SMART goals, right? And I'm sure that you guys have heard these before, so I'm just going to briefly go over what it is that they are, right? And the first one is make sure that you're really specific about, what it is that you want, how much you want, and so make sure that the goal is specific in that way, right? Make sure that it's measurable. Make sure that it's something achievable. Make sure that it's something that is relevant to some of the other goals that you may have, and make sure that it's time bound. So we don't just want to be saving forever, right? Make sure that it has some type of time limit on it. All right. Different saving strategies. So this is one that that we go over quite often in my one-on-one interactions with the members that I meet with. And I am a big fan of making sure that you set up direct deposit and designate a certain amount to go into the savings account. And the reason that is because money that you never see is money that you don't really miss, right? And a good rule of thumb on this, that I talk to my members about is starting out small. Something that you will not even notice is coming out of your paycheck. And so if that means that you have to start saving, $5 out of every paycheck, it's not a matter of how much you're saving. I always like to tell my members that it's a matter of how disciplined you can be about your savings and then not going back into that money to be able to fund your day-to-day expenses. So start out with something small that you won't even feel has been, taken out of your account. And then as you are more comfortable with that amount, you want to just slightly increase until you are at the goal that you want to be at. Okay. Also, making sure that you compartmentalize your savings. And so using multiple accounts to be able to stash money for different goals, right? Going back to kind of those reasons that we were saving on the previous slide, right? So if you need to have multiple accounts, let's just say that we are, in addition to going to vacation, we are also wanting to make some repairs to the house, right? And we're also wanting to save for emergencies, right? Don't limit yourself to just one account. Make sure that you have multiple accounts in the event that that's what you need, okay? Putting the money in an account that is not easily accessible, like a share certificate, IRA, and education fund, right? So back to the previous slide where we were talking about making sure that you're time bound for those people who have, a certain amount of time that they can actually put money away. Things like share certificate, is perfect. Or if you're saving for children's education, there are specific accounts that are earmarked for those purposes, right? And so making sure that you take advantage of that. But one thing that I wanted to include in this one in particular was also accounts that just regular savings accounts that you may not necessarily have access to. I know that we can actually sometimes hide the accounts that we have online so that you can't see them. Or maybe it's a situation where you don't connect your debit card to be able to access that. So just whatever you can possibly do to make it just a little bit more difficult to access the account will be easier on you, right? It's a saving strategy. And also increasing your savings amount whenever you get a raise. So I know that it is kind of around raise time right now. People are getting, their 3% to 5%, whatever it is their range is in terms of where their employer is. And so it's also a great option to look at, right? Because you have been comfortable with the amount of money that you've been making prior. It's possible to look at, starting with that as a way to be able to create your savings account. Okay. Next, we're going to talk about different fun ways to be able to actually start savings accounts. And so some of you guys may have seen some of these challenges online before, but we just wanted to make it a point to kind of go over some of the big ones that we hear, right? And so the 52-week challenge, and basically what this is that in week one, you save $1. In week two, you save $2, and then you continue each week throughout the year until the end of the year. And at that particular time, that gives you an amount of 1,378, right? So kind of a way to be able to challenge yourself in a fun way, in a game, if you will, right? To be able to put together a savings account, okay? The next thing that we're going to talk about is the 30-day no spend challenge. And basically on this particular challenge, it's where you make a challenge to yourself not to spend money on anything that is not necessary for at least 30 days. Now, of course, you guys are going to want to make sure that you spend your money on your food. You're going to want to make sure that, in the event that you're on any type of medication, that you're going to spend it on that, right? Gas to be able to get around where you need to go. But just anything unnecessary, i.e., maybe, we can cut out junk food and we can just eat, regular food. This will also help for those people who want to lose weight too. So that just not came to mind when I was thinking about that. But if we are in a habit of maybe going out for entertainment, maybe this particular 30 days, right? You put that off, right, and see how much money it is that you can save for 30 days doing that. Okay. The next couple are just going to be kind of self-explanatory and save the change, right? So whenever you go out and you actually make a purchase, subtract the cent amount, and then whatever you don't spend, you round to the nearest dollar and then transfer that into your savings account to be able to at least start a savings program, all right? Also, the no dining out challenge. So for those people who like to go out to eat all the time, maybe this for this particular a set time frame, right? You're not going out and you're cooking at home, right? And then the $5 bill challenge is whenever you actually receive cash, whenever you receive a $5 bill, you actually put that in a savings account rather than put that back into the amount of money that you just spend on a day-to-day basis. Okay.
All right, Jason. We have covered quite a bit of information here, how to save, what type of uh, strategies to use. and there may be some reasons that we are needing to save. We got a couple questions coming up here, and again, we're just going to cover a few in order to have enough time to cover the entire webinar itself and answer as many questions more towards the end itself. Um, what is an emergency fund that you are talking about?
So basically it is an account that you call and set up, in the event that you would like to save for an emergency. It's kind of self-explanatory, right? And you're going to use this particular account to fund whatever expenses that you may incur when something unexpected happens.
So basically, it's a secondary savings account that we have. We have it titled as emergency fund. And to my understanding, our members can change that name to holiday savings or car saving or anything like that, school clothing for my kids savings, etc. Uh, in this account, Jason, are there any restrictions of utilizing this money when an emergency for you may be one thing, for me may be another? You know, I may need tires. That's an emergency because it's my vehicle. Is there any restrictions or reasons that we must give for this?
Yeah, and because just like you said, because this is subjective, right? There is no reason, that you would have to necessarily have to take money from the account. It's, whatever your emergency is, you just call in and request that money. And I think it's an awesome idea to be able to, and I like that you brought that point up, identify the type of account that it is that you are actually putting into, because when you go online, it appears that way and it makes it a little bit easier in the event that you're transferring money to know exactly where you are saving in what particular category you're saving for. So, yeah.
Good. Jason, are there any other accounts that our members can create that are going to pay them higher dividends in return? And it may be for a longer period, uh, a bit more restricted, but that they can save, like you said, for an emergency if needed at all?
Yeah, so there are things like share certificates that you can actually call in. There are some restrictions on that. Most people would more easily know them as CDs, right? And basically, what happens is you have a set amount of money that you put into a particular type of account, and then you designate how long you want that particular amount of money to be in that account, i.e., 1 month or 6 months or 12 months, right? And at the end of, that duration of time will be when you actually receive, the amount of interest that you've gained on that particular account.
Correct. So yes, our share certificate products start at 6 months, and I'll be talking about that one later on. And then, of course, up to 5 years that we have as well. And like Jason said, these are a bit more restricted, but you're able to save at a higher return for you. And that's why we try to help our members get more in return for their investment. Um, there's one in particular called the Dream Share Certificate. You can start with $25. That's all you need. And you can add on to it, not like the other share certificates that you lock them in with one specific amount for a specific term. The Dream Share Certificate allows you to add on to it. So again, like Jason had mentioned, ways to save and ways to retain funds for those moments of emergencies itself, if it needed to be. And of course, if you had to touch it, it may be a small penalty or a small service charge for getting those funds. But again, you're getting a lot more in dividends itself. Last but not least, do we have any applications or do you have any Excel sheets that we can provide as tools to jumpstart any savings accounts? How to, keep a log of it, as we no longer have past books like in the past. You can see I put 25, now I have 75. I put 50. Yeah, something like that.
I am sure that we can come up with something to be able to document the amount of money that people are wanting to just identify that they're saving. Absolutely. So just contact our member services department, and they can provide you with something for that.
All right. For now on, because again, sake of time, we'll let you continue. We're gonna have one more Q&A session at the end of the webinar. Um, so continue, please.
Those are some great questions, guys.
All right, Jason, we're now on our next polling question. Again, please jump in. Feel free to answer these questions. Um, what is something that you want to save for? Simple question. Um, A, emergency fund. B, home purchase. C, retirement. B, vacation. E, other. Um, One of the first things when people are growing up and becoming adults, they want to purchase a home. So again, we're here to help you with that process. You start small. By the end, you have a lot of to put down on the house. As Jason mentioned, the emergency fund, it's relevant for you. One thing it's an emergency, for him it's another. Retirement, we all look forward to that. And like Jason mentioned before, if you are a company that offers it, take advantage of it. Most important, I guess, for me and Jason, vacation. Right, Jason? We were talking beforehand, and I know we were almost through with the webinar, with the polling question about going to Argentina. So, all right, Jason, the poll question closed out. Um, the majority are listening. They are interested on the emergency fund that they would like to save for. Uh, Following very closely next is home purchase and retirement. So the priorities are up there so far. And again, our most popular one will be vacation time, which is always needed, some good relaxation and time for your own itself. Thank you again for those joining us on the polling question, taking your time and answering. We appreciate you. We applaud you. Um, we'll continue with Jason in order again to have enough time to cover all the slides and everything else. Thank you, Jason.
Yeah, so just going back to the poll question, not to veer away from that too soon. I wanted to reiterate, right, that these are just some of the most popular responses that we get. There is no limit to the things that people save for, right? Another big one that I'm surprised to see didn't make it is most people save for cars as well, right? Depending on whether or not they want to put a down payment. So I don't want you guys just to think that because this is the second time that now you've seen these particular types of reasons to say that these are the only reasons. People have a number of reasons that they actually want to save. And so, yeah, don't limit yourself to just these, okay? Creating a savings plan. So different ways to create a savings plan, ways to save when you're living paycheck to paycheck, right? So some of the things that you can look at are making sure that you can find a second job, right? In the event that the first job is just not enough, right? Maybe going out and getting something part-time. And there are a number of people that do that. There are a number of people that do different things. So that is one of the ways to be able to start to be able to save, right? Another big one is selling stuff that you no longer need or use. And this is one that I will personally say that I am a very big fan of. If you don't use it within, I want to say 3 to 6 months, like for me, it is a no-go. Have a garage sale, put it on Facebook Marketplace, and just get rid of it, right? I'm not the type of person that keeps stuff that they don't need, and so I'm really big on that one. And then cutting back on any unnecessary expense, right? Another huge way to be able to make sure that we can start saving is creating a budget. And I'm really interested to see how many people currently have a budget, right? I know that when we typically say that word, people cringe because they think, oh my God, I'm not going to be able to spend any money. And how am I going to make it? And, I'm not going to have any fun. And life is just going to end if I, have to turn off all my spending. But that is absolutely not the case. The way that I actually like to talk about a budget is it's just making sure that you're more intentional about where it is that you're actually spending your money and you're actually accounting for, the fun times that you want to have after your priorities and your obligations have been met, right? And so one of the ways that you are actually going to create a budget, right, just to make sure that everybody's on the same page and understands how to do this, is that you're going to document every source of income that you may have, right? So where all do I have money coming from, right? Calculate that, total it up. And then you're also going to make a list of everything that you're obligated to pay on a monthly basis, because that's typically what we want to look at is a monthly basis, right? And then when you've documented that, you want to determine your needs versus your wants and then adjust accordingly, right? You come out with that number, right? And it'll give you whether or not you are in the green or whether or not you're in the red. And then you'll just need to adjust, right? And for this particular presentation, we want to make sure that we also include a savings plan in that, so that you can create your savings account to get to that point to where you have at least $1,000, and then there you're on your way, right? And the thing to remember is you always want to make sure that you pay yourself first, right? So just going back to that, as you are creating your budget, make sure that you include an amount to be able to put into a savings account. Okay. How to maximize your income, right? And one of the biggest things to do on this is analyze your pay stub, right? Do you get back a huge tax return every year? And if so, you may want to increase your dependents so you're paying less in taxes every pay period, right? And getting more money in your check throughout the year instead of one big lump sum. And remember that the IRS does not pay dividends on your money. So if you can save it yourself, do it, right? So just making sure that you look at your dependents, making sure that you look at what it is that you're contributing to your 401k, okay? Also making sure that you take advantage of flexible spending accounts. This is a big one. Is there any extra, are you paying for any extra benefits that you don't use? And I found myself guilty of this a couple of years ago where I was paying for a legal service, which I mean, in some people's minds, that's probably legit and it sounds good, right? But the fact of the matter is, I'm not a guy who gets in trouble or really needs to take advantage of that as of right now, or I had not, right? So that's one of the things that I kind of, exited out of things that I was paying for. Not to say that it's not useful for anybody else, but it was kind of one of those benefits that I wasn't taking advantage of. And so it was kind of pointless for me to be contributing to that, right? And then also making sure that you use raises and bonuses to fund your savings account, kind of going back to what we talked about earlier. Whenever you get a bonus, take a portion of that and set it to the side for your savings account. Or whenever you get a raise, take a portion of that, to be able to set aside for your savings account. Now, we talked about plugging the leaks, right? And the way that we do that is by breaking any bad habits that may currently be breaking you, right? Like dining out. And this is huge for me. I've still got to get a grapple on how much I go out to eat, but it's just so convenient. But in the event that you are not in a position to have a savings account the way that you wanted it, this is going to be a huge one, right? Also coffee stops. So for the people who love Starbucks and all the other different coffee names that are coming up now, right? This is huge. Versus going out every day to be able to purchase a $6, $7, $8 drink, trying to, make coffee at home. And also smoking. And I know that I don't want to pick on any smokers, but it is a very expensive habit. So, in the event that you can possibly get away from it, look at doing that. Look for ways to save on monthly expenses like your cable bill, right? Anytime that you may need to, and I do typically try to do these things once a year, but checking in with your auto and home insurance to make sure that you're taking advantage of, number one, not only the best rate, but sometimes also the best company as well, right? Different companies are going to offer you different rates. So making sure that you check on that regularly. Gym memberships and also subscriptions. I know that I actually benefit, and I'll just kind of tell a personal story of mine of this past year. I'm not going to say the provider that I was with, but my cell phone provider, I was on a plan where I had unlimited everything. And so it was working perfectly for me. I had unlimited data, unlimited, anything that you could think of. Everything was unlimited. And I was paying $150 for that particular service. But what I did not know was the plan that I was on was an outdated plan. And so in the process of looking to upgrade my phone, I go in and I talk to the representative about updating my phone, and she was like, "Oh, well, it looks as though you're in a plan that we no longer offer. Let's see what it would be, if we were to be able to get you into one of our new plans and try to, match what it is that you currently have." So my new bill came out to be like $99 a month. So, just that particular interaction, I was saving $50 a month, by talking to, a provider that I already use and probably would have continued to pay had I not been interested in getting a new phone. So make sure that you guys check your subscriptions and your providers that you're currently with to make sure that you guys are on the most updated plans and that you're getting the best rates. Okay. Also use cash to stay on budget. So, if using your debit card or your credit card, kind of trips you up in terms of how much money you have to be able to spend, I know that a good, psychological way that people who are money people tend to limit themselves from spending too much money is to just use cash, because you can actually physically see that you're running low on cash and that you may need to stop your spending. So that's a good one. And then making sure that you track your spending in your budget, right? And if you need to adjust, making sure that you have the ability to be able to adjust, okay?
All right, Jason. Webinar question number 3, and again, thank you again for everybody joining us and answering on these. If you spend $6 on a latte or a coffee every day before work, approximately how much will you spend over a year? Again, $6 on a coffee every day before work. Um, Approximately how much will you be spending over a year? A, about $700. B, about 1,000. C, about $1,200. D, about $1,600. Um, Jason, I know you and I like coffee. We have more than one a day, that's for sure. I know, like the company you mentioned before, their drinks, the small one's probably about $6, and people
The
usually like
small one
going.
is.
Yeah, people like the Italian word venti. They want the 20 ouncer, the big one, and they like the frappuccino macchiato with 3 pumps or whatever. That's like $9. So I wonder. I would say maybe $1,200. So we got a couple more seconds going, and we got the answers coming through. All right. So the poll closed up, and we have a real good audience. They know. I guess they're coffee drinkers like us. They know. The majority answered D, $1,600. So enlighten us. Tell us your guru mind of coffeeness, please.
Well, before we go into that, I would also like to add that I went in the other day and was completely stunned by the price that I was actually paying for the type of milk that I get. So I like almond milk in my coffee, and that's an upgrade. I was thinking like, man, I'm already paying for the coffee, a milk, the type of milk shouldn't be an upgrade, but it was 70 cents just for the upgrade to almond milk.
Really?
So
Wow.
to
Yeah.
be able to get to the answer, right? A lot of money. If you spend $6 on a latte before work every day, you will spend nearly $1,600 per year. And the way that that breaks down is $30 in a week, because we work 5 days a week, right? At $6 equals $30. And then there's going to be $130 per month, because there's not just 1 week in the month, there are four weeks in the month. So you have to multiply that times 4. And then once you multiply that times the number of months in the year, that comes out to be 1560 in 1 year, right? And so if we were to just think about, the statistic that we started out with, in that, only 4 out of 10 Americans can actually afford to be able to pay for an unexpected expense that's at $1,000, right? Just by eliminating, this particular expense, we've already kind of gotten over that amount, right? So it's just about, making sure that we cut where we can to be able to get to where we want to be and accomplish the financial goals that we have in mind, okay? And you can see how this can play out in just coffee, right? So just imagine if we were to really dive into our budget to be able to look at what it is that we're spending our money on. All
All
right.
right. So, what is your favorite tip for saving money? So please, this is really involving you guys out there. Type it in. What is your favorite tip for saving money? Um, Jason has a coworker that she uses the picture that he had before, jars with labels, and she's teaching her kids how to save money, how to have money available for charity, and how to have money for expenditure that they want to do on their own thing themselves. um, Me personally, how do I save money? I basically put money in my savings and I close my eyes. I don't want to even know what the hell is there. I don't want to know what's there. I don't touch it. I don't. So that's my personal. What about you, Jason? And pretty soon we'll be reading some of these out that our audience will be answering for us. We're going to have Sarah pull them up and reading out for us as we go, as you continue with the presentation.
So some of the biggest things that I actually do is, like I mentioned earlier, the direct deposit for me, right? If it's out of sight, out of mind, it never goes into my checking account. I never see it. I have the money going directly into my savings account is one that is huge for me. Just because I feel like, I manage my life based on what is in my checking account, and anything that's not in that account is not money that I even have or account for, right? And then another really big thing that I do that I mentioned earlier is, if it's out of sight, it's out of mind for me. So I love to hide my accounts online so that I can't actually see the account. And so that's another huge one for me.
Yeah, that's true. So if you want to continue, Sarah's going to pull up the information our members provided, and we'll see what it comes out of that. Thank you.
All right, guys. So here are some other tips, right, that we have accumulated from a number of different sources, right? And so just kind of briefly go over these to identify different ways that we have heard from different people on how they save their money, right? But some of this stuff is just going to be repetitive that we've already gone over. Renegotiating any type of bill that you may have, right? Bringing your lunch into work. That's another big one. Dining out a little bit less, right? Trying generic brands as opposed to buying things name brand. So all of these things are going to be ways that you can actually save money. Okay, so document these for yourself to be able to pick the ways that you feel like will be able to add to your life and your savings goals. Okay.
Jason, do you want Sarah to read out some of the comments the audience put out there?
Yeah, let's go ahead.
Sarah.
All right. A lot of people said like saving apps, like Chime or different other stash apps. Somebody said cutting their cable and other subscriptions that they don't use anymore. Um, and then someone else said they have a bunch of CDs that they invest in. Um, there was another one that I liked, that I use. Sorry.
Yeah, as
Um,
you search for, oh, go ahead.
oh, the app that Acorns is what I use, but they said an app that just um, invest your change. Basically, it will charge you the rest of the dollar amount, and then they're going to put that change into a savings.
Yes, that is correct. And we offer those tools as well. If you go into our website, we have tools that can help you save your change as well. But one that recently one of our coworkers here, he did a garage sale. And I believe he mentioned he made $2,000 in one day, and he wasn't selling high. He was selling apparently a couple of dollars this, a couple of dollars that, and he was able to clean out and made $2,000 in one day. So just imagine that's the case itself. Thank you, Sarah, for jumping in and throwing out our attendees' responses, at least some of them. I know there were many more. And Jason, back to you so we can continue the webinar. Thank you.
Just to piggyback off of the apps versus the streaming services versus kind of paying for cable. One thing that I will warn you guys of is making sure that you don't sign up for so many that you're paying the same amount that you would pay for cable, right? With the Netflix and the Hulu and the Max and the, whatever it is that you can download, right? Just be cognizant of that so that you're not spending as much as you normally would by paying for cable because it can easily happen. Okay. How can the credit union help, right? So one of the things that we do in our department is we actually help review credit reports, right? To make sure that you guys are on track with not only savings, but maintaining a healthy credit score. We analyze your monthly spending plan, so those budgets that you guys have either created or have not created but need help on, that's something that we do here. We help reconcile accounts. We help put together plans to reduce the debt that you currently have. We develop or change spending plans and also habits. So maybe sometimes people have things that they aren't necessarily aware of. We can help identify those and bring them, to the forefront so that, you can change whatever habits it is that you have. We help you to avoid payday loans. And we use also service provider referrals, and we also help with opening emergency share accounts. Okay. All right, so some of the ways that we actually do that is through these tools and resources. One of the easiest ways to get to the financial wellness department in particular is going to financialwellness.aacreditunion.org, right? On there, you can fill out what's called a program agreement. And once you fill that out, one of the counselors will be in contact with you to be able to schedule an appointment for you to have a one-on-one consultation with us. And then as you need to continue with that, we will follow up accordingly, right? Also, in the event that, the one-on-one consultation is just not your thing, and if you are more self-paced and have the ability to be able to comprehend different financial strategies, you can also log on to the Navigator at navigator.aacreditunion.org to be able to do different self-paced learnings on different types of financial products there, okay? We also offer Savvy Money, which is a credit monitoring device that allows you to be able to monitor your credit. And then also taking advantage and utilizing the online banking system when you bank with us, okay? In our department, there are certified credit union financial counselors, and we all help with financial assistance for people who have bruised credit situations or people who want to continue to maintain healthy credit. So reach out to us for that. Also, advanced financial indebtedness solutions assistance. Continuous accountability, support, and guidance is what we also offer, and also educational seminars and webinars throughout the year that very similar to what you're currently attending, right? And the way to be able to reach us is at this telephone number here, if you want to write that down, and that particular email address to be able to contact us through email, okay?
All right, Jason. The webinar is not over. We're gonna make sure that our members out there, and for those that are not members yet, can take advantage. I'm gonna give you a real good tip on how to make quickly $250. But first, for those that are not members yet, this is your opportunity to jump in. And as long as you're with the air transportation industry itself, you'll be able to join the credit union itself and become a member owner. So simply use this QR code here if you want to use your phone for that, or go into your laptop and visit visit our website, aacreditunion.org. You can feel free to call us, stop by one of our branches, uh, email us at weworkforyou at aacreditunion.org. Once you are opening your account, towards the bottom of the application, there's going to be a question. Do you have a promo code? Today's promo code is B as in boy, D as in David, 4412. What this is going to do is going to open an account for you. You become a member owner. Once a member, you're always a member for life. It doesn't matter if you change jobs and you decide to go and work for your city, decide to go to a private institution as a worker itself, and we'll put the first $6 in the account. It doesn't seem much, but it's just a step towards financial wellness. That being said, and as I mentioned and as I promised, I'm going to tell you how to make $250. So for those that are members already, if you give the gift of membership to your family members, to somebody that lives in your household, to your coworker, again, in the air transportation industry, once again, to your wife, to your kids, to your sister, to your brother, to your mama, to your daddy, you get $25 per account that you refer and that is opened, and it's up to 10 a year. So that's $250 right there. So if you have two kids, that's $50 plus the wife, that's 75 right then and there. If you have grandkids, again, same thing. Um, we're also going to chat a little bit again for those that are our member owners about our offers. We will do wrong by not letting them know what's going on. And for those that are not, they'll get a taste of what we're giving our member owners, and they may want to be part of our credit union and take advantage of that as well. Again, once a member, always a member for life itself. Um, so again, we're talking about saving money. So why don't get one of our credit cards? And you're gonna say, well, I have three. Well, you want to get one that has the best rate possible. And when you compare our rates with what you have in your pocket right now, you probably have a 25, a 27, a 30, a 32. It all depends on your credit worthiness. Ours, the highest, and it's not promotional, is 18. So the lowest, to my understanding, is in the realm of 13%. So again, if you can shave 10% of the rate, that's just great for you. So again, revisit, talk to us, and let us know what we can do for you. We have great offers for our credit cards itself. We are currently offering another way to save is if you have a high interest credit card, you can do a balance transfer at 2.99% annual percent rate on this. We don't have transfer fees like some other companies do, 5% that they'll charge you. We have no annual fees in our cards. So again, we are giving you back in order for you to save and get healthy financially. Open any of our products and we are able to help you with that transfer itself. Even if you are currently a member and you have our credit card, take advantage of the transfer. It's good for 6 months. So if you start now and we are in April, 6 months from now, I believe it's somewhere in October. If my math is right or wrong, 6 times 4 is 10, October, correct. So again, it's a matter of you taking advantage of that. Let's suppose you get into a new mortgage. Our rates are very competitive on that as well. You'll be able to get either $250 back as a cash reward, and you could be able to get a credit card as well once you apply for it and get about 25,000 connection points. Ways to save, again, as we mentioned before, is if you have a vehicle and you have equity on it, you can refinance it. Use those funds. The lending, the rate is a lot lower because it's a collateralized loan, and you can pay those higher debt that you have outside, condense it all into one, and your payment and your cash liquidity will be available to create all those great opportunities that Jason mentioned before. Talking about cars, we are currently in the month of a drive and save event nationwide. There's great opportunities for you or those that are needing a vehicle may look into it. You can get a chance to win $1,000 towards the auto principal that you're getting. So if you are were to buy a vehicle and you were the lucky winner, the 1,000 goes into the principal. So they'll shave part of the debt and you'll pay your vehicle sooner. You have a 90-day car deferral payment. So car deferral payment for 90 days. Just reminder, interest accumulates and insurance needs to be carried. So again, we want to be transparent. Yeah, we give you great opportunities. We want to make sure you're aware of it. We want to give you the opportunity to save up to 0.5% of your annual percentage rate on the rate that you get. Information for that, your loan officer can tell you how to get that 0.5% discount. I'm just going to throw really quick at you. If you have a checking account and you have direct deposit, you can get a 1/4% adjusted on that rate. If you're a member already and you had loans with us for the past 2 years and everything is great, you can get a 1/4%. Or again, if you are a brand new member joining us, welcome to the family. We will give you that 1/4% welcome aboard, and you can combine two of those, no more than 0.5% that you'll be able to deduct from the rate. So again, only 0.5%. Even for those that have cars with us and they take advantage of the refi, we are going to be able to, if they don't have the direct deposit, we will be able to adjust that 1/4%. So again, it's just different ways of giving you the opportunity to take advantage of what we're offering out there. Uh, Again, open a checking account if you don't have one and set direct deposit within the first 60 days. We'll accumulate and give you $25 on that. We're going to go for some Q&A now. Jason, I know we're running out of time, but before we run out of time, let's go and see what we got here on the Q&A. Somebody's asking, how much do you recommend saving and when do you recommend stopping?
So I was actually just going through that scenario in my mind. So it's so weird that that was asked. So the way that I always recommend to my members or someone that I'm working with, right, is that the way that you want to start is start out small, right? I think, and it's just my discipline, right, that it's not about how much you save, it's about how much you can save comfortably without going back into the money that you have earmarked for your savings account, right? So if I was starting, I would pick a number, and it's going to be different for everyone, right? Depending on how much it is that you make in terms of your income. But start out with the smallest amount that's possible, right? That you can identify you would not really feel from a financial perspective, right? And then once you're comfortable with that and without having to go back into that money, you can incrementally increase that as long as you want to. And then depending on the goal that it is, the time frame is going to vary, right? If you are able to actually meet your, let's just say you're saving for an emergency. Sometimes those accounts, can potentially just continue to go on until you actually have an emergency, right? Or in the event that you actually have to dip back into the money, you possibly can, right? But if you have a specific goal, like to purchase a home or to purchase a car, the expiration date on that, of course, is going to be at the time that you purchase. So it's all subjective. But I would say the best strategy for me is to start small and become disciplined on that particular amount. As you become more comfortable, increase that particular amount and then go from there.
Cool. Jason, somebody's asking about the balance transfer offer. Does the other balance have to be less than my AA credit card? I'm gonna, if you don't mind, I'll jump in this one. It has to be on whatever amount available you have on your credit card with us. But again, make sure you talk to one of our subject matter experts, the loan officer. Let them review. Maybe your credit card cap can be increased for you to take advantage of transferring that amount at a lower rate itself. Again, it doesn't cost you anything to talk to one of our loan officers. Feel free to drop by one of our offices, call us, do it online, and they'll be more than gladly help you get your financial wellness and success put together and to further your financial enhancement in life. Just to be conscious of everybody's time, we want to make sure to say thank you again for tuning in or returning to one of our webinars. We see that some of you guys have been in some other of our webinars. Remember that if we didn't get to your question of yours more of a personal nature, be happy to reach out to us on the survey, put that question there, send it back. And next week, early next week, a subject matter expert will be able to assist you with that and touch bases with you. Don't forget to check our event schedule. We're going to have a event this weekend in South Florida near the airport, the Miami Blue Lagoon office, the Drive and Save event. We're going to have dealerships out there on the weekend of the 13 and 14. Right now, we're having the virtual sale. So it's online from April 8th to the 14th. But if you go this weekend, April 13th and the 14th, we will have about 5 to 6 dealerships there. Prices are really well priced, the vehicles. Plus, you can see me there and you can say hi to me as well. Again, making sure that everybody's aware of our webinars. Visit our events page. And every Thursday at 1 o'clock, we have one. Follow us on Facebook, Instagram, uh, X, formerly known as Twitter, and follow us on YouTube as well. Make sure you give a thumb, subscribe, a like, YouTube channel, American Airlines Credit Union. You can see not only this webinar, prior other topics that may interest you, and you can share with your family as well. As mentioned before, thanks to Jason, Mike, Sarah, Sutton, myself, and the entire credit union for their opportunity. We hope you're having a great year so far. Stay healthy and stay happy. Jason, anything else you want to close out with?
I don't. Just thank everyone for joining the call, and thank you for the opportunity to be able to present today.
All right. Thank you, everybody. Have a great one, and feel free to reach out to your American Airlines credit union.